I'm Amy Jo Martin. Welcome to the Why Not Now show. We are in for a treat today. We have Lisa Detanna, who is the Managing Director and Senior Vice President of Investments at Raymond James. She is a friend of mine, a mentor. She manages my money. Lisa has been an expert in the world of finance for many decades. She has billions and billions of dollars in assets under management with a team that supports her as well. And she's taught me so much about the market, about money, how to leverage money, and also just the psychology behind it. So I sat down with her and we talk all things AI, money, and markets. And I sat down because I've been hearing some things in the headlines, and I've even been hearing friends and colleagues talk about different things, and I'm like, wait, that's not exactly true. Yeah, I think that we have a few of these facts a little shifted, or there's perception of certain things happening, especially because of AI, that may not be the case. So I wanted to set the record straight, also get a lay of the land of what's going on in terms of, technology, AI, with the markets here domestically as well as globally. So Lisa and I met in 2020, right before the pandemic. I was speaking at the Global Top 50 Financial Advisors Conference for Raymond James. Lisa was 3 women of the 50, and we shared a ride back to the airport together. I didn't live in Austin yet. Long story short, we become friends. We started exchanging knowledge, exchanging value in terms of the field I was in and the field she was in. She becomes my financial advisor. The pandemic hits. I start listening and learning a lot more about the markets and trying to really understand how the markets would respond to the pandemic. She saw that I was leaning in, and long story short, she encouraged me to go get my Series 65 so we could create a professional partnership. So we do. If anyone that I refers to Lisa wants to work with her, that is a total possibility. So if you're interested after you hear from her, feel free to reach out to me. amy@amyjomartin.com is my email, and hopefully you'll get some new perspectives on what's happening right now with AI, money, and markets. I'm so excited to be here in your offices.
Thank you for coming, Amy. It's always a pleasure.
I can't wait to talk about what AI in general.
Okay.
So you and I were just talking about this. There are all of these myths that I feel like people lean into, and it's kind of driving me crazy, Lisa, when I hear just some of these things that people kind of believe. But like, what are you seeing right now? We've talked a lot about the long term, what's going to happen with the GDP, and truly when things become more integrated with AI and the lift that we'll see. But like, right now, lately, what are you seeing in terms of the market?
Well, I think the interesting thing about right now, to your point, is with all the issues of the conflicts and the war, especially in Iran, kind of bubbling up, hopefully ending soon, but with a good outcome. Most expected markets to be down, down, and down, right? And that has not been the case. Economic data has come in pretty good, actually. The issue really is, what are you reading on AI? Who's behind the AI that pops up? And is there an expert that you're listening to, or is it just someone that has their own website and AI, right? So I guess from a learning, educational viewpoint, it's really great now that clients and just people at large that want to know something, easier than typing it in, right, on your laptop or iPad or whatever. Mm-hmm. But you're really getting, in a very quick time, a summation where you don't have to even piece the Google and dissect it. But it isn't a replacement, I would say, and Raymond James spent quite a bit of money to develop what we call Ask Ray, RAI, which is going to be rolled out to clients soon.
That. Good branding, by the way. Whoever's behind that, good job.
But, Ray isn't there to replace a me. No. It's really there to augment the client, to your points, education, knowledge, empower them, if you will. But I would say that, anybody can be an expert on a website. So really, it's looking at the sources of where that information that you're getting is coming from. Mm-hmm. But it is giving some inner strength and financial background so that clients maybe understand the lecture they're hearing. If there's a economic speaker, like mm-hmm. last year we had Jeremy Siegel from Wharton Business School. He's considered one of the top economists. Give a lecture, but buttressing, let's say, your knowledge, and to your point when we were chatting, prevent you from hitting the sell panic button because there's an issue that just comes into play that could conceivably create losses in the portfolio.
Right.
But what we're forgetting is when AI is all inclusive convergence in all industries.
Pure convergence across every industry, every company, every vertical.
The power.
All boats are rising, right?
Yeah, the power of that is, GDP expectations for the world, 4 or more for a sustainable amount of time.
Which we haven't seen maybe ever other than
post-World War, 1940s.
So here's one question I have for you. So we read the headlines, and this is where I think there's just a danger in trying to assume things about AI. So we see, let's just say, we've had big companies have rounds of layoffs, and people assume it's because AI is taking human jobs. But actually, is it accurate to say in a lot of these cases it's because the company is wanting to invest more, like from a CapEx perspective, into AI and innovation, and maybe they're cutting in other areas? So it's not necessarily what you might think, right? It's not that all these jobs are just being replaced right now. It's maybe a reallocation.
I think it's a rebalancing of deployment of capital, and to your point, CapEx spending, and taking out bonds, which tech companies, had bonds, but not to the level that they're seeking income to up their game in AI and get there first in whatever lane they're in and be the leader in the space. I think that it is displacing some workers, but then opening up other jobs, right, mm-hmm. to your point. And I do think that for those trade jobs, not the typical entry computer science tech major first right. job, mm-hmm. but the trade school jobs, clearly, unless you're perhaps a driver or a factory worker, if you're a cabinet maker or a craftsman, plumber, those jobs are there, right? But the programmer is what everybody seems to be concerned about. And I'm not an employment expert, but I will tell you that we just had the Mag 7 week, right? Here is just beginning of all the earnings coming out.
Yeah.
And they're pretty good.
Yeah.
And I think the point is we're looking for this world GDP, once AI is in every industry, to grow. And as we're seeing in our investments today, that even with a lot of headwinds, whether it's economic spend because of the conflicts that are going on, we're seeing that unemployment is still very low, right? Inflation is slightly higher, but not horrible. And GDP is pretty good. So it's an election year, right? There's always a lot of between the sides bantering, but I think we want to use the AI, back to your earlier point, to really augment and try to educate ourselves so that we don't feel, if there is a down day, that we don't want to panic and hit the sell button, but maybe look to fine-tune the portfolio every once in a while.
So when you look at like the .com era where, all these valuations and companies, the acquisitions and all the consolidation, but also the overextending in wild, inflated valuations. There's like no revenue, and it's just like. One thing that I think is interesting that I've heard you say, and I'm curious if this is still trending this way, is that from an AI perspective, that isn't happening right now. We're not over, the multiples aren't crazy, and we're not overextending kind of that.
You're absolutely correct. And in those days, and I'm dating myself, but we called it pro forma cash flow models. Mm-hmm. That is, guess what the earnings and profit will be, because the company's not making any money right now, right?
Pre-revenue.
And we're going, in that case, we were going intranet to internet, which seemed like a big deal, and Y2K seemed really scary. It turned out to be a nothing, right?
Social and cloud and all the things.
But we were looking at a drop in the ocean compared to what we're looking at now. So we do think that when AI converges on all industries, which could be as early as next year, some of the AI experts in tech leadership are saying 2029 at the latest, but there will be this global GDP that could hover around 4% for 3 to 5 years, which we haven't seen since the 40s, post-World War.
And for anyone listening, when you say convergence, you mean when AI is fully, integrated into all aspects of business and the markets, right? So not just tech companies, but like we're seeing that all boats rise with, is that?
Yeah, so even like look at healthcare, for example, right? We have computing capabilities with AI for all these research studies around the world, where new technology, repurposing of drugs, better convergence of data, right, to treat life-threatening illnesses. Radiology, for example, the robots are doing the surgeries, but in radiology, a scan can detect cancer years before a radiologist can see it. Now, there's going to be a doctor there. Like there's a doctor, maybe the AI is actually doing the robot surgery, but there's a physician there.
Orchestrating.
Yes, and reading the scan also. But this is really exciting because it is in a lot of applications in healthcare and also on the budgeting side. All of a sudden, AI can tell a company, by taking all this data that all the different departments and divisions have, and the compute power is a lot faster. So the efficiency, the productivity is going to go up, and we're looking at a period of time here where it's very exciting for clients in investments that are changing the world pretty rapidly, to your point.
I always say, the future of technology is the future of humanity, and healthcare is one area that's it's radical. I've seen it even in my own life. But even non-innovative types of sectors, look at supply chain, look at CPG, just things are accelerating in an automated way that we're, from the convergence point, like everything is just starting to kind of lift and feel that. Productivity and
productivity,
cycle time, just
And I think even in the shipping and stuff, and even the costs of people lifting 200-pound boxes, where now a robot can do that, right? And not hurt themselves. So there's a lot of implications, but I think it's also using the AI for a client when they don't do something 20 hours or 8 hours a day, because they do that for their job, right? But investments, they rely on an advisor or someone or a team to help them, their CPA, family office manager, whatever. And it's really a way to augment what they know about something, where they can ask AI, hey, what does this mean? Right? What is GDP? How is it calculated? Right?
Yeah.
And maybe if they get some opinions on AI in addition to what their advisors are telling them, they won't panic and hit the sell button because of the volatility, because we know that historically that is absolutely the wrong thing to do, right? Because every time the market goes down, even with the crash at 29, it comes back and goes higher. And in the last 15, 20 years, the time it takes to come back and go higher is much shorter than it was during the Depression.
Just even the last couple of months. Look at
That's true. And last year's pullback. Yeah. And a lot of people forget that the market has, up to 4-6 corrections a year sometime and still can do well. So I think it's bench strengthening, let's say what you're hearing or what you believe, your psychological certitude inside, the voice that tells you, oh, this is getting really tough, I should maybe sell. Use AI as a tool, right? Don't be afraid to call your advisor and say, hey, I read this or I heard about it on a podcast. Tell me what you think about it. So it's a way to open up the dialogue and have some informed, educated knowledge. We used to call it behavioral finance. And we give people these big books, right? Read this so you don't panic and sell, basically. And no, this is nice. I'm going to set it here. And when someone says, do you have any books about finance? Here, take mine. But
now you can talk to, while you're driving, you can be learning about.
Yeah.
But so question for you, when, let's just say the next, not too long from now, probably, we're going to see some pretty big tech and AI companies go public or AI centric. Let's just say maybe it's OpenAI or SpaceX, different, but Databricks or Ring, who knows? If their performance isn't what maybe was expected, is that going to have a downstream impact on confidence, whether it's CapEx or it's just the everyday person questioning the value of AI and what it's going to do to the market? Is there a lot of weight being put on these IPOs?
I think, there's certainly the amount or numbers of companies that maybe would miss their earnings, right, in a sector or space makes people worry more. And I think that right now, the big Mag 7 companies, for example, they're taking on debt, right, for cap expenditures. And sometimes people think, well, they've never done that before, or they had very little and now they have a lot. Well, they want to get there first, right? And I think, and that's a general statement, but it does ring true. I think the main thing is there's ways to position your portfolio where you can participate in something to reduce risk, or if you're more aggressive, you don't have to be in a fund or the NASDAQ or a index specific to what you're looking for in technology. You can own those individual investments, but you also have to own something too. And if you're my age, you can't be all in that, right? Because even though it may be the best thing since sliced bread, you have to have some diversification in the portfolio. And right now, for example, we do like value stocks. Our chief investment officer, Larry Adam, he particularly likes infrastructure. He thinks that financials and healthcare are within the value lane as rates go down, especially in financial. Those are nice things to have as a diversifier in your portfolio, but he still likes technology.
Well, look at the performance. I mean, it's just, so if we look at just in general, let's take money mindset, right? Or just the psychological safety that we do or don't have as humans when it comes to money. Switching gears to this experiment that I've been doing. So it's May, we're 4 months in to a 12-month experiment where I'm giving a lot of information, data from biometrics to how my screen time, my schedule, a lot of information. And then also, this is This is interesting. The change over time with my own personal spending as well as the business's profit and loss, not just spending.
That's great, by the way.
Well, I saw a 66% decrease in my personal spending in Q1 year over year. And that's just like, discretion, like just not anything specific to my fixed expenses, but I think it's just because I'm tracking it. I think I'm more aware.
You're aware of it.
I was almost embarrassed when I saw the drop. I think it's more very intentional about where my time is being spent, but the 66%, I was like, wow.
That's great.
Lisa's gonna be happy.
I'm impressed.
I know, but also we've talked a lot about time, right? And the value we put on our time. And I think this is the first time I've had a manicure in like a year. Meaning like getting my nails done because I don't like the amount of time it takes and I'll do it myself, or like coloring my hair. And when we look at AI and how we're spending our time, one of the things I've noticed is it's able to show me the cost of a project, a scenario, a relationship in different currencies, right? Not just financial, that's for sure, and time trade-off, but cognitively, metabolically, like psychologically, energy-wise. It's tracking how much friction or drag I'm having from certain things. And it's almost like having a P&L on a scenario or a project.
Yeah, on your life, I guess, is what you're saying. And I think that is really wonderful and being very mindful. And I think that, for me, unfortunately, my dad always taught me, as he was a chef, that before you cook, you have to clean everything, right? And so I started tracking sort of my time a little bit. And I found myself spending a lot of time cleaning. And I thought, this is really not a great use of my time. And how can I change this up a bit? But it clearly lets you dice and slice the data to do some analysis, whether it's a personal constraint, how can I have more efficient time? How can I get more free time to do what I want? Especially budgeting, it's really super duper because in the old days, I would tell clients, they have those pens that were multi-ink.
Yes.
I'd say if shopping for clothes is your thing, put the red pen down in the stack and make a checkout in those days with red. And then when you get your monthly statements, go through and highlight the red ones. So in essence, that's what we're doing with our life. Mm-hmm. And I think whether it's our health, right, our portfolio, AI is giving us an easier vehicle to monitor, to educate, but also, to your point, help us make decisions about, do we want to change this, and where should we look to change? What's the fastest way to get to the result? Because you have the data. Mm-hmm. And it's interesting, even in your portfolio, we use AI now to sort of look back and monitor and measure not only investments, but let's say the mix of investments, the amount of times that we look to rebalance or change the strategy, and really try to memorialize a cash flow model, and you've done them before, where you say, this is what I earn, this is what I spend, how could I save to hit goal so that I could live like my highest earning income years throughout my whole life. And don't make it 90 or 100, go to 120 now.
I was just going to ask you to talk a little bit for a moment about that. Like, we've talked a lot about this before, just longevity, and you're aware of some of the innovations and incredible things, and you get like a frontline view, but have you really shifted the way you're extrapolating to
Yes.
What's the norm age that you kind of assume?
We try to run out a cash flow model now to 120. And some people giggle when I say that, but I actually have 7 clients that are 105 or older. And a couple of them drove until they were 101 and 103. and they were still able to drive, but their kids, who were in their 80s, took away the keys, which I thought was very, very cute, right? And this is without a Neuralink chip.
Right?
Yeah, this is now, right?
So it makes sense that you're projecting and running models around 120.
And I think we have to budget that in, to your point. I think we also have to be realistic, and we did a partnership, Raymond James, with MIT, called the Age Lab.
Okay.
And we sort of said, sure, we all want to live long, but we want to have a purpose. How are we going to have lunch with our friends? How are we going to get there? How are we going to be able to get food into our house, right? Get our clothes washed and clean, get around in our house, and drive. So we started this about 10 years ago. So now we don't even need to worry about having to call an Uber, right? We can buy a self-driving car. Pretty soon you can just sit there and be a passenger.
Right? I mean, pretty soon / now, right?
Right, but you know, the certain model that does that, you know, if you're not looking ahead or touching the wheel, it shuts you down. But it's interesting. So there are refrigerators that reorder your order as you eat it down, or it gets rotten and you throw it away. There are things you can do in your home to be more practical, or you can say, maybe it's time for me to sell the house that me and my spouse have, where we took care of all the kiddos, and let's enjoy our life, to our point earlier about, having a over 55 or however old you are community where you're living, and it has things right there in your neighborhood that you can do and like. There's more and more of those places.
So interesting.
In a over 55 community, they also have, assisted living in some cases with escalation of care. So it's really planning, again, like, what do I like? What do I dislike? Mm-hmm. How can I make my life more enjoyable? Do I have enough money to do this? And the younger we start, because you have me talk to a lot of your collective, right, at Renegade, where you say, talk to them, Lisa, about their 401k at work. So if you put $100 a month away for 20 years, pre-tax, and the company makes a match, but we won't even count that, you're really missing 60 cents from your check because it's pre-tax. Mm-hmm. And with compounding, over the first 20 years, it grows to $423,000. If you did it for 7.2 more years, it would double, and every 7.2 years after that. So if you started something like that in your 20s, by the time you were in your 50s, you'd have $4 or $5 million, right? Mm-hmm. At just the average stock market return. Mm-hmm. So it's really telling people with that cash flow model, mm-hmm. whatever the number may be, hey, you're 40, and if you just saved $312 more a month, and if you did that in your 401k, it's pre-tax. So in round numbers, it's like you're only missing half in your pocket, unless you live in a state tax-free state, and then it's 2/3. But your company may make a match. You could easily live like your highest earning income years throughout your life to age 120.
And that's it sounds so simple and basic, but it doesn't seem to click, right? It seems so far off, or it seems, how is that possible? But that growth and that compounding effect
it's a big head start. It's a big head start. And I think, look, people, they have a family, right? Then maybe they take care of a loved one that's grandparent maybe, and time marches on, right? So it's really not, it's not just being an expert about the investments. It's about using AI, to your point, to sort your data and say, where am I spending? What we talked about offline a minute ago, what are my issues? What do I spend on? And mine is, I dilute myself in clothes. close.
Yours close, mine's both.
And it's sort of like I have to have a deal, but it's still really expensive, right? So I don't know. That's
Mine's
not
like once every several years, and but it all adds
big
up.
ticket, sure, yeah.
But then I'm good for a while. Like, but I have to talk to. I'm like, Lisa, can I get?
But you know, to your, yeah,
But it's an appreciating time asset for me because Lincoln, and I know it's a depreciating asset, but from a time perspective, memories and joy, and it's an appreciating asset.
See, but you said it. You have to have fun too, right?
Yes, right.
You
Yes.
can't just be working and saving so much that you're really miserable,
Yeah.
right?
Start learning to color your hair and do your own nails, and then you can get a bow. Or
You
can send
and
your
you
kid
did
to
a
college.
podcast about that. I saw it. It was hilarious, actually.
But
So
it's
cute.
true. Like the compounding over, it's also your time. Like when we start to assign a value to our time, like if you were to advise me, anyone, like how would you help someone estimate the value of their hour, right? Do they look at their overall like earnings over the course of X amount of time and start dividing down, or how do you kind of start calculating your time?
Well, that's a great technique if you're a lawyer, right? The bills by the hour, or you're a consultant,
Right.
because you actually see the revenue broken down.
The billable,
Or even if you punch a clock, or you're a teacher, for
got a
example.
salary even.
And I think, you know, in some cases, like if you're a firefighter, you're allowed, and you can still do this in many jobs, you can have another job, right? Or if you're working like a firefighter, you work for 3 days on, and you know, you can actually fit another job in. If you're a teacher, you have the summer. But it's really, here's where I am. Here's where I need to be, because I think I want to retire at 65, 75. Some people say, I love work, I'm going to work until I drop. But whatever the thing is, the goals are, put them in a planner, and they actually have them online or through AI, but if you use an advisor, it should be part of the process, clearly, because you can't just have the same portfolio with someone else if you don't have those same goals, right? You have to have a unique portfolio that fits your goals. And bonds are designed for income and preservation of principal, right? And stocks are really, you know, for growth. So it's sort of like, as we age, to your point, we need to shift to have more income in the portfolio if we're not working. And we have to take into consideration the taxes, right, of what we're doing. It's not just what we earn, it's what we keep in our pocket. You and I have talked about this a lot, that it is really the time that we spend on earning money is clearly important. But if we can earn the money and have our methodology of our business set up in such a way so that we have legitimate, bona fide, deductible expenses, and I'm not a CPA, but you clearly start with a cash flow model and talk to a CPA with your advisor, and you say, if you're self-employed and you own your own company, is it better for me to have an LLC, an S Corp, a C Corp? What things am I not deducting that I can, that are legally deductible? Are there ways for me to save for my child to go to college, like a 529 plan? If you've raised enough assets to where you're looking to gift to the next generation down, what's the most efficient way can I do that? And if you give to charity or you're charitably inclined, there are ways through a donor advised fund. You don't have to have a private foundation, just a simple turnkey account that you gift into, that you get some tax deductions, right? And you don't have to pay, you know, in lieu of, let's say, selling your stocks, paying the tax on the gain, and then writing a check to the charitable organization.
I'm thinking about like your role and your expertise and your team, and how, like with this experiment, I've been giving it so much information and data to where even if it's like deal flow or confidence over the course of a week, if something's happening or something might happen, like it's tracking and it's able to mirror back to me my behavior or psychological safety based on what may or may not happen based on that week's, like, this investment actually might transact, or we had this opportunity come in. There's so much psychological nature to money. Do you think, like, your skill set and your teams and just in general, you're going to become even more of a therapist now?
I think, here's what I think. Knowledge, they say, is power. So when I first started as a financial advisor and investment advisor many moons ago, there were no personal computers, right? They were, but they blink at you when you turned them on. You'd have to know all these codes just to get into work, right? Yes. So, let's say the advisor had intranet and had all the tools, right? You couldn't just type in something and see what company A is doing and what the strengths and weaknesses are of the company. And now you can see that instantaneous. So information is free, it's available. You just always need to be mindful to check your sources, because there's so much information, I would say, on the internet. And I'm not, belittling anybody, but clearly the economists that are known to be great and right, it's better to listen to something that is, regurgitating information from that than just someone talking that has not a proven track record, let's say.
Some random headline.
So, but you have the tools at your fingertips, and it will give you a second or collective second opinion on your investments. And it's great to have, you should be able to ask your advisor questions, is how I'm going to say it. If you ask questions and you have somebody you're working with that maybe isn't willing to answer all those questions, that's not the right fit for you. Because the more you learn about whatever it is that you do, you have a baseline knowledge, so that because nothing goes like this in investments. Always. It goes like that, to your point. Right. And sometimes it goes like this, and then it goes back up and higher. We try not to like those. Those are very emotional, right, when that happens. But sometimes it happens, and it's something completely extraneous out of left field that causes it. So the data may not predict that black swan, which was my point, but you have a general understanding, and rather than just look at a historical chart on a stock or a bond, you can now ask AI about it, and it'll tell you why those things happen, right? Mm-hmm. And it takes what used to be a month of work, let's say, 5 minutes. Mm-hmm. So you can ask an informed question, and you should have somebody that can guide you through that. And to your point earlier, hopefully it takes the emotion down, because when people panic in general and do an action when they're in that mode, it's historically not as good as when they've made an informed decision. Mm-hmm. So I think that market cycles, you go to a lecture, you see all these charts and graphs, and you're just like, oh my gosh, I'm not an econ major, right? Mm-hmm. But you can ask AI about those charts and graphs, and then ask your advisor about them. And I think you said it, I'll say it how you said it to me earlier, it lowers the temperature, mm-hmm. so that you do not get nervous from the headlines and maybe panic sell, mm-hmm. which historically hasn't been the best thing.
It's interesting how it can become a mirror, right? Just for patterns and behavior, like psychological safety rises and falls throughout the week based on what's happening, even if it's not real yet. Like, I might make a decision about something else because I know this is not a possibility. Or but it's telling me that. It's like, hey, nothing's changed here. The data's still the same, but it's the perception. Oh gosh, thank you for chatting and sharing. And I know we've been talking about AI now for a couple of years, you and I, with what you're seeing, and it sounds like it's definitely even accelerated some of the predictions of convergence. And any advice you have to anyone that's watching right now?
Well, I would say the genie cannot be put back in the bottle, so we have to embrace it. And I think it's just personally, I always feel having a positive attitude about a major change agent that's happening, which this is one. And it'll work out, right?
Yeah.
And I think this is a great time to invest. And it doesn't mean throw out the baby with the bathwater, but it means look at your allocation, look at the information, work with someone that you trust, and start investing, even if it's a little bit at a time.
Yeah. I have to share with you one last note. So I was in San Diego yesterday, meetings the day before, and I'm at the pool, and I'm on using Cloud Code, right? Working on a project. And it occurred to me, in an hour, I probably got more done than last year at this time. It would have taken probably a few days. And nobody else on payroll needed to help me with this specific project, but last year they would have. It's just moving so quickly, but I'm like looking at the beach with Cloud Code, and I'm like, I almost feel like I'm cheating. You know? Like, this is good. Like, this was good. It's just like, yeah, the upside. Like, we can be obsessed with the opportunities, or we can be obsessed with the challenges, I guess. But
I think it's great to stay positive, and it's going to work out. That's how I look at it, and I think it's one of the most exciting times in our economic cycle. We don't get many of these paradigm shifts, let's call it, and this is going to be a big one. And I say stay invested and just make minor fine-tuning changes to your account periodically, every quarter, look at it and embrace it.
yeah, thank you.
Thank you. You're so awesome.
You're